Hello and welcome to Success Source. In today's video we'll be talking on assets that can make you rich. If you are yet to support our channel, please kindly click on the subscribe button and turn on the notification bell. At some point or other, we all want money. It is a necessity of world life, I admit it. You should not be a slave of money, but you must understand the importance of money. People are not rich only because they have things or because they can buy things. True wealth is defined by the asset you own. You are truly rich when you have something called an asset. Something that works for you, makes money for you, something that appreciates your money. It's important to note that predicting specific assets that will make you rich in a given year, such as 2024, is highly speculative and subject to market volatility. However, considering investment strategies, here are 8 assets that have the potential to contribute to wealth accumulation. Number 1. Real estate. Properties, such as residential homes, commercial buildings, or rental properties, can appreciate over time and provide a steady income stream through rental yields. Investing in emerging markets or high-demand areas can yield higher returns. If think real estate and investment purpose, then it could make sense. Buy a cheap house that you can afford, which you won't have to take a lot of loans for. Number 2. Stocks. Investing in well-established companies with strong growth potential can be a lucrative asset. Researching and selecting stocks based on fundamental analysis and market trends can yield substantial returns. Diversifying your portfolio across different sectors can mitigate risks. Stocks are not as complicated as those Wall Street firms make you believe. Stocks are an easy way for you to own a percentage of a publicly traded Vistas if business issues. There are many platforms out there that allow you to purchase this type of share and invest it in the stock market. The most common and trending platforms for buying and trading stocks right now. Number 3. Patents. Patents are awesome. When you invent something new, you can protect your invention by filing a patent. For those unfamiliar with them, it's a document that certifies you as the inventor and describes what your invention has done. With this protection in place, companies have to pay money to use their innovation. If they don't, you get to sue them. Patents are incredibly powerful and valuable in the business world. Number 4. Mutual and index funds. If stocks allow you to purchase shares in a company one by one, mutual fund and index funds bring in multiple companies together. So, you're buying into the entire basket of companies as a whole. Why is this better? Basically, you're more diversified. So it's a safer investment to make. Statistically, index funds are the best performing asset class. Number 5. Bonds. Nowadays, the government's businesses might require cash. They can issue up something called bonds, which gets sold to the interested investors. Through these bonds, the government or the business vows to pay the person buying the bonds a certain amount of money. Every month. Generally, bonds have an expiry date on them from 1 month up to 30 years. Bonds are usually in the 3% yearly return, which is better than most banks offer, but not high enough to get a beginner investor excited. When the bond reaches its end of the principal amount is returns the investor. The main ways people buy bonds are 1. Directly from the Treasury Department or 2. through a brokerage firm. Number 6. Cash. Apple company has over $200 billion in cash reserves. That's liquidity. So why do rich people keep such a good portion of their wealth? Wealth and cash reserves. 2 reasons. 1. Being able to access any opportunity that presents itself, which is pretty self-explanatory. If you think about it, the deal of your dreams is in front of you and you don't have the money to take advantage of it. 2. They can get higher returns straight from cash deals. Not only do people offer better pricing for cash, but you can also lend money with high interest. This practice is called peer-to-peer. Number 7. Raw materials and commodities. The price of raw materials and commodities fluctuates and varies depending on the market. If you're smart about it, you buy it when it's cheap, hold it and sell it when it's in high demand. Some of the wealthiest people in the world are buying a rare vintage car that is quickly appreciating. The same goes for other collectibles like luxury watches, and now before you go and blow all of your money on a vintage Rolex because you read some post on Quora about how they double in value over time. You might want to take a breather. Never invest in things you don't understand. It's one of the most important rules of money. Disobey it, and you will never be rich. Number 8. Royalties. We've rushed a bit on royalties on the previous points, but there is an entire world revolving around them. The simplest way to put it is you wrote a book. That's great. A movie studio wants to buy the rights to your book and make a TV show out of it in exchange. You're getting a portion of the money generated. When a TV show becomes so big, it makes sense to open it up to multiple broadcasters, keeping up with the Friends example. The cast of the TV show is still earning between $10 and $20 million per year each from the reruns of the show. That's insane. Let me know if I miss any assets in the comments section. I hope you find today's video helpful. Don't forget to hit on the subscribe button and turn on the notification bell.